Hey everyone, welcome back to Corporate Decoder, the place where we try to decipher if a company's progress report is actually a masterclass in financial gymnastics or a genuine step forward. Today we're diving deep into SPA. Our group incorporated its latest filings, and let's just say there is a whole lot of reaffirming and extending going on. Make sure you're subscribed and join our Discord community, linked in the description, because we're about to break down what this really means for the company. This report is all about a crucial credit facility, which is basically a company's lifeline for borrowing money. Think of it like a flexible credit card for businesses, allowing them to borrow and repay as needed. SPAR Group has been working with North Mill Capital, and this filing details a significant update to that agreement. So, what is the big news? SPAR Group, through its subsidiaries SMF and SCC, has just inked an 8th modification agreement with North Mill Capital. This isn't just a tiny tweak, it is a pretty substantial overhaul. The most exciting part for any business owner or investor is the extension of their credit facility. This means their ability to borrow money has been prolonged, pushing the date from October 10, 2025, all the way to October 10, 2027. This provides a lot more breathing room and stability for the company's short-term financial planning and long-term operations. But it gets even better. Not only has the term been extended, but the actual amount of money they can borrow has also gone up. For their United States operations, the borrowing limit has been boosted from $28 million to $30 million, and for their Canadian operations, it is a healthy jump from a previous limit of $2 million Canadian dollars to $6 million US dollars. This increase in available funds suggests the company is anticipating growth, or perhaps needs more working capital to support its current operations and strategic initiatives across both countries. It is a clear signal of renewed confidence from their lenders, or at least a willingness to provide more resources. Now, let's talk about what they can use this credit line for. A big focus for SPAR Group's credit facility involves unbilled accounts. These are essentially invoices for work that has been done but not yet billed to the customer. The credit facility allows them to borrow against these unbilled receivables. The report highlights a significant increase in the cap for these unbilled accounts in the US. It has gone from $7 million up to a whopping $15 million. This is a very important detail because it means they can now leverage a much larger portion of their outstanding invoices to get cash flowing. For a business that relies on billing clients for services rendered, this ability to access cash against even unbilled work can be a game changer for managing cash flow and seizing opportunities without waiting for the full billing cycle. On the Canadian side, there is also a change affecting minimum interest charges. They now need to maintain a minimum outstanding balance of $1 million US dollars to determine these charges, which is an increase from the previous $500,000. This change likely reflects the increased size of the Canadian credit facility and aims to ensure a certain level of usage and consequently revenue for the lender. Now, amidst all this positive news about extensions and increases, there is also a mention of waivers for specified defaults. This means the company had some issues that technically breached their loan agreement. Specifically, they were late in providing their financial statements for July and August of 2025, as well as some compliance certificates. There was also an issue with some Canadian corporate credit card debt and related security arrangements. While these were waived under this new agreement, it's a reminder that even with these expanded credit lines, the company still faces operational challenges and needs to be diligent in its reporting and financial management. These waivers are usually temporary and come with conditions, so it is important to watch if these issues are fully resolved. To formalize these changes, SPAR Group issued new promissory notes. For the US credit facility, they've got a 6th amended and restated revolving credit master promissory note for $30 million, and for Canada, it is a 5th amended and restated revolving credit master promissory note for $6 million. These notes essentially lay out the new terms and conditions of the restructured loans. Let's touch on the costs. For the year starting October 10, 2025, there is a facility fee. For the US facility, it is 0.60% of the amount borrowed, with an additional $6,000 charged for every $1 million borrowed above a certain benchmark. The Canadian facility has a similar structure, also at 0.60% of $2 million US dollars, with the same additional $6,000 charge for increments above its benchmark. These fees are standard in credit facilities and represent the cost of having access to this money. Looking at this filing, the story is one of a company actively managing and strengthening its financial backbone. They've secured an extended runway with increased borrowing capacity, especially highlighting their ability to leverage unbilled receivables. This is crucial for operational flexibility and growth. However, the mention of waived defaults, while expected in such negotiations, does point to some internal control or reporting hurdles that need continuous attention. The increased borrowing limits are a positive sign, suggesting lenders have faith in SPAR Group's ability to manage and repay larger sums, likely tied to anticipated business growth or the need for greater working capital. The emphasis on unbilled accounts is particularly telling for a service-based business like SPAR Group, as it directly impacts their liquidity and ability to fund operations while waiting for client payments. In my opinion, SPAR Group is taking proactive steps to ensure financial stability and support future expansion. The extended credit facility and increased limits are definite positives, providing a much-needed cushion and enabling more strategic financial maneuvering. The key risks to watch will be their ability to consistently meet reporting deadlines and manage their Canadian corporate credit card obligations. If they can navigate these operational aspects smoothly while tapping into the expanded credit lines, they are well positioned for continued development. The increased borrowing capacity against unbilled accounts suggests management is confident in their revenue pipeline and their ability to collect on receivables. Alright, that is our breakdown of SPAR Group's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.